Mr. Shiva Kumar has been known to me for many, many years. He is a very thoroughbred professional in finance, and he has done extensive research on various areas and has been very successful in consulting as well. He had a glittering career in BEML as the general manager of, culminating as general manager of finance there. But more than that, after that, he did some very pioneering work on activity-based costing and activity-based management. And his book on that subject was very widely followed in academic circles. After that, he has been very successful in dealing with company-specific problems. And in recent times, because he's a constant thinker and a constant innovator, he has started putting his attention on risk assessments in specific scenarios. And of course, it will always be related to internal control, which is his fond subject anyway. And so he is going to discuss today very briefly about the ERP environment and risk management with an emphasis on internal control. So I don't want to waste any more time. Over to you, Mr. Shiva Kumar. Thank you very much for accepting our invitation.
Thank you, sir. It is indeed a great, it's a proud moment for me, and it's also a privilege to address this August gathering of this forum. And before I begin with, I want to just make a small confession that I'm neither an academician nor an expert in ERP, particularly in its configurations and in its configuring the business processes. However, I do appreciate a lot about the ERP, its power to encompass all the functions of a business organization. At the same time, it has some principal limitations in terms of cost, complexity, and also transaction traceability. I had an encounter with ERP many years ago. I was working in a public sector company, manufacturing very heavy engineering equipments. The company managed all its information needs through what is called as a homegrown RDBMS in Sybase, and the system was pretty robust, and it was doing. But the management felt that it's time that we have a better system, so we will go in for a well-branded ERP, and so that many exceptional managerial accounting reports can also be generated through it. The ERP system did, replace the RDBMS, but however, it did not serve its intended purpose. First of all, it was a very, very complex software. The traceability of a transaction right from the beginning to end was very, very difficult, even though it was not impossible. And multiple transaction codes, popularly known as T codes, and interwoven screens were a nightmare for many of the users. And in fact, many users started looking at ERP as an excessively risky proposition. I was also one of the persons who had this view for a long time, but it was hounding me for quite a long time. And I was, particularly when I was reporting something about the internal control and financial reporting, what is popularly known as ICFR, I was carrying out sample transactions as a test, and then test them for the risk control management matrix, and then say that it is fine. But still, within me, I knew that I am not fully convinced about whether all the risk that is the company is carrying has been fully verified, or whether it has been come out, even though I know what is about a COSO cube. Regarding the COSO cube, I will talk a little while, after some time later. But it took quite a long time for me to understand the idea of internal control, and also how it can be integrated in an ERP environment. Over the years, ERP has made a very deep penetration, and also it has now it has spread to several industries. The perception of the ERP has also changed over a period of time, and now today people know, and the industry know, as well as the persons know what to expect from ERP, and also how ERP can be managed. But the complexity still remains, and it still remains. And if this factor of complexity and is not taken into account, and if the configuration is made very badly, in that case, we will be having a situation where the very purpose of the internal control will be lost. I will just narrate this with three examples which I had encountered during my professional experience, that is after leaving my job. The first one is a case of a consumer electronics store. This particular consumer electronics store is spread across India. It is managed by a very big Indian conglomerate, and it sells everything from electronic and electrical goods, right from a pen drive to big products like refrigerators, and also cameras, and also all sorts of things in its product basket. The transaction processing is concerning sales, procurement, finance, inventory, all are centralized in the ERP in the headquarters. The product absorption of the overhead is based on the sale volume, or basically on the sale price. This is when designed by the store's collaborator in UK, and they said this is the best method to do it. So the ERP also configured accordingly, and in ERP configuration provided, for not only for this, it also identified for the slow and non-moving items. And as the time passes, the goods will be automatically moved in the ERP system from the fast-moving to the slow-moving goods, or to the non-moving goods, and it will be sold off at a discounted rate. Okay, now let us look into it a bit carefully onto this. Is it proper to absorb the overheads on the basis of sale value? Is a big question. There are companies, there are products like digital camera, a high-end digital camera, which may be around some 2 lakhs or 3 lakhs rupees, but it occupies a very less space. A refrigerator may be costing less, but it will be having a high space. I mean, it will be occupying a more space. A pen drive doesn't occupy any space at all. So a blanket way of allocating the overheads on the sale value makes the products not only costlier, it doesn't move in the market. Even though the footfalls or the footprints for the shops are more, the goods are not moving. So this was because of the wrong configuration, because not understanding the process correctly. So this issue was brought to the notice of the management, and accordingly, instead of taking it on the monetary value of the sales, it was considered the dimensions of the product, and also what is the ease of handling as a factor. And why I'm highlighting this is ERP configuration plays a very big role in the internal control systems. The next case I would like to say is about a case of a warehouse cost allocation to the material cost. This case relates to a FMCG company, which is also spread all over India, which has got a low price product but with high volume sales. One of these many ingredients, and one of the important ingredients for this their products is a particular species of wood that is taken from the forest. So the wood is taken for a long, it is chopped off during a particular season, and then it will be kept in the warehouse for a long time, and then it will be issued for production. There are multiple warehouses for this company to make its products. The ERP configuration was such that only when the goods are moved from the warehouse, the allocation of the overheads will take place. Suppose the goods are not moved, then for that month, there is no allocation of the overheads at all. And if there is a part goods is moved instead of the full load, then the allocation of the entire overhead is rest on the part load that has been moved. So in the end of the day, when you see the result, the same item of input which is purchased from the same source will show a different what you call material cost because of the wrong allocation of the overhead. So this was an issue that was what you call taking the attention of the management, how the material I purchase, when I keep it here, how it keeps on changing its value. This was a very serious issue, and it was also playing on the product margins. So the chief or the root cause for this is that the configuration in ERP they made based on the what you call the movement of the goods, not taking into account the capacity of the warehouse or also how many days it has been stored, was a big issue. The third what you call third case I'm talking about is a very large company which is manufacturing polyvinyl chloride. The main raw materials for this company is the ethyl alcohol and sodium chloride. Sodium chloride is salt from the seawater, and ethyl alcohol they were taking from the what you call sugarcane waste, and also they were importing. So the manufacturing process involved use of steam as well as electricity. So the company was generating steam in their boilers, and the steam was led into a turbine, and the turbine in turn will generate the electricity, and the outlet steam will be used for other production purposes. So steam was also generating and electricity was generating. The ERP configuration was such that steam was also treated as a raw material, and electricity was also treated as a raw material. At the end of the month or end of the period, the accountants had a hefty job of finding out what is the steam that is stored in the inventory and reduce the inventory to the extent the steam consumed. Well, all of us know steam is not a raw material. You cannot hypothecate steam and get loan. So is the case also with the electricity. The wrong configuration gave a what you call a different scenario, and this did affect the profitability, the product cost, etc. In all the three cases I cited to you, the profitability as well as the product cost were badly affected. That means the internal control systems were not proper. It is not because of the anything to do with the COSO cube or whatever it is. It is mainly because of the wrong configurations. So my point in telling you these three cases is, even though ERP is good and people have understood, unless the people understand the process and then configure, you will be getting a very bad results. It is happening in many companies. Of course, there are many large companies where it is done. Now the key point to note is that first you optimize the process before you automating it. That's what I firmly believe in that. Now let us talk about what is actually this internal control system. This internal control business first came into picture somewhere in the year 1949 when the American Institute of Accountants first specified it. Later, this was called as the American Institute of Certified Public Accountants. The American Institute of Public Certified Accountants revised their definitions in the year 1972. That is what I have put it in the this one, what you call in the slide. Now, just in US as well as in Europe and sometimes even in India also, the case of Enron, Fannie Mae in US, which went for the downfall of the Lehman Brothers, Satyam Computers, and all this proved that whatever the internal control we do have, but the system fails and the entire what you call the stakeholders' money, everything goes into drain. So this made the American government, and more under the pressure of the Security Exchange Commission, to pass what is called as a Foreign Corrupt Practices Act in the year 1977. As a response to it, many organizations reacted, particularly the Institute of Internal Auditors, as well as the Institute of Management Accountants, to form a committee called as Committee of Sponsoring Organization under the chairmanship of James C. Treadway, and this popularly known as COSO, that is the Committee of Sponsoring Organization. In the year 2013, COSO came out with a revised definition of what is an internal control. That is, internal control is a process effected by an entity's board of directors, management, and other personnel designed to provide reasonable assurance regarding the achievement of the objectives relating to operations, reporting, and compliance. So one of the points we have to note is regarding this. Let us just analyze this definition. One of the key points in this definition is, what do you mean by process? Now, according to me, process consists of people. Apart from the what you call transformative assets like machines, etc., people is a very, very important resource for that. People, and then next is the technology, and third one is the data. If people are not involved in a process, then what you call, even in automated process, we have got some sort of an human intervention. So the process, it is a process to attain objectives. People can assign to the task, do the task assigned to them. It is only through a delegation of powers duly approved by the board of directors and percolated down the line. That means it has to be segregated to the last point where the people are performing their task. So this is one of the important aspects in the internal control. Internal control, first and foremost, requires segregation of duties by way of a what you call delegation of powers. Only when the delegation of powers is effective, people can perform their tasks, and their tasks or their achievements can be monitored. Other important aspect on the internal control is internal control should be flexible, and it should adapt, or it should respond to the dynamics of the business. Now, in today's practice, many a time, internal control is more seen as a year-end activities at the time of the closure of the books after the audit. And now we have to do internal control as a dynamic process, and it should be, it should be monitoring, and it should proact with the changing business needs. Also, it should be able to provide a reasonable assurance, that not an absolute assurance, to the board of directors by the people involved. This is what the exact definition of the what you call internal control by the COSO. These they are represented in the form of a cube, and the top face of the cube gives the objectives in terms of operations, reporting, and the compliance, while the segregation of duties comes in the adjacent side. Well, it has been very clear in that it should give not only at the entity level, division level, and the operation level, it should go at the branch level as well as the function level of all the people involved. And what are all the components of that is the risk assessment, then the control activities, information and communication, and monitoring of the activities. This has been defined through 17 principles. Of course, what are all those 17 principles is select and develop a control activities, and select and develop. This is a general, what you call the management one, duly formalized with the rider that there should be what you call integrity and also the ethical values. Now, when you say that internal control system is existing in an organization, it means that all the 17 principles are in place in the company. But this is what the entire what you call the COSO tubes talks about it. Now let us go back to from this theory aspect of this internal control into ERP environment and sample testing. Now this one. Now how this has been done is, how the sample test is done as of today is, you will select a module, and the management will go through the, it will go through the module, and it will say which are all the control processes involved, and what is the what the management perceives as the risk, and how the risks have been mitigated, or what are the steps it is going to take the mitigated. And a sample is taken by the internal auditor. Based on this sample, he often what you call, he makes a test, and he says that yes, now the internal control is in place. But I always, as I told you earlier, because of the wrong configuration, you may have so many issues which may not come out in the sample itself. So we have to have an approach which is entirely different from what from doing the sample testing. One of the best ways to look into is how to go in for a bulk transactions to consider, and then apply a system wherein you can also find out whether these can be easily, it can be easily taken. Now, this is possible in a non-ERP environment where the traceability of transactions from origin to end is very easy. But in the case of ERP, it is slightly different because the same transaction crisscross through several modules, and the traceability becomes a very, very difficult task. Suppose as an auditor or as an assessing guy within the organization, if you want to find out whether the transactions are passing through the same, you require a technical assistance. You have to travel through several tables and several T codes, and then arrive at a point. So to check for one one transaction, it may take quite a long time, and still you may not be clear what it is. I mean, this was one of the questions which was haunting me for a very long time. That means when I am saying that I see in internal control and financial reporting that everything is okay, then within me, I know that I'm not 100% sure that what I have done is correct or not. Always this sort of a tinge of insecurity always exists when you go into a sample test. And based on the internal auditor reports only, the statutory auditor gives the clearance saying that everything is fine. So this sort of an issue always persists. So now how to combat this issue is a major issue. So I mean, it's a major point. So I looked at it in the process should be, it should not disrupt the ERP system. At the same time, it should take out the best out. You should take out all the transactions from the ERP system, and then give out the exception. What we did is we made out we made a brainstorming session. We found out what are all the possible issues that is connected with configuration that may give some sort of a exception to the general rule. For instance, there may be a agreement with the party that all the goods that is supplied will be on a FOR basis, but a purchase manager may bypass this rule, and he may create an ERP generating a purchase order which is on X works basis. So what happens? The company involves gets into a financial loss of higher payment of interest. This is a case of a financial loss, and there may be also a improper validation in the case of the masters. I have come across the cases where one single item has got 36 part numbers. I'm not talking about 10 years back. This is something which is happening in the present context. It doesn't mean ERP is bad. ERP is good, it's excellent. But the way we look at and the way we look at the process is different. There are many large organizations where ERP is working extremely well. In fact, the company in which I was working had a well-defined delegation of powers, who has to do what. And many of these delegation of powers, the authorization, approval, write-offs, everything was integrated into the ERP, and the system was going slowly. But at the same time, there are quite a large number of organizations where these principles are not ingrained, and ERP has been installed without optimizing the processes, without finding into the segregation of duties, and that gives into a lot of problems. So I thought we'll have a new approach to this problem. How to do this approach? I have given the steps in this slide. First, you take the selection of your module and the period for which you want to scan all the transactions. You scan all the transactions in the module. The modules are generally what you call procurement to payment, order to cash, then asset accounting, and then we have got this one, material management, and of course, sales and distribution. So you take all the transactions related to that particular module, is a module you want to check, and scan all the data. In fact, this in the beta testing, we took a case of around 1 million transactions to do this job. Then once you do that, design an exception parameters. I told you about the freight. There may be also cases where a vendor is blacklisted or blocked from transaction, but since the organization is huge, somebody may be also placing the order, and the ERP may not have validated this, and you may be also placing the orders on the blocked vendors. And similarly, the payment terms may be what you call 30, I mean for 30 days credit, but he may be the purchase man may negotiate and may give it at the point of payment at site. So like this, there may be several parameters. We listed around some 40 to 50 parameters in each of these, and we said these parameters should be interfaced with the transactions in ERP and find out how many exceptions are there. Once these exceptions come, I know these are all the exceptions where the risks are involved. So the second point is design an exception parameters, and then you take it into an independent database. And then the third one is search for the existence of these exceptions in the database that you have in the database from the transactions you have taken from ERP. And the fourth one is identify. Yeah, and then you programmatically you find out what are the types of exceptions here are there, and find out the type of exceptions gives you the type of the risk. And then for the reporting purposes, you can use an ETL software, that is extract, transform, and load, and you can give the results in a what you call in a cloud format or whatever it is. Now the point is how to take the data from ERP to your independent database. This can be very easily done. Every database, every ERP has got a facility to take it into a CSV file, and the CSV files can be bulk loaded into the database. And in database, you create a lot of links and views and everything, taking into account the exception parameters to generate the results. So it is a 10-step process which the system will do itself, and it will give you at any point of time what all the exceptions are there. Each exception I consider as a risk. Now let me show you how this one is coming. No, this one is scheme. 1 minute. See, this is how we are taking. It's not coming there.
Here it's visible to them. Here it's visible to them.
It's visible to them. Yeah, you can take it. The first one is the start is where you take the ERP access, then take which are the modules you want. And generally ERP has got two types of tables. One is called as a header table, which is a summary table. Another one is called a detail table, which will give the details of the transactions. You extract them and put them into a CSV file. Then take the CSV file, bulk upload the CSV file to the database which you have developed. Generally, I take an open source database like MySQL, and then also upload the exceptional indicators which we have formed and interface that in the system, and you will get what you call various views and calculations. Use these views and calculations and then load them into an ETL software, and from the ETL software you will get what you call the multiple reports which you can be seen in your mobile, or you can see anywhere, wherever you can, I mean the management can see. So now the entire concept here is move out the internal control check from the point of year-end activity to a continuous activity. So as and when the problem is taking place, you can also have a look at it. So now, once I know what are all the exceptions, I can also find out what is that each exception is a risk and what is the type of risk it is. Generally, the risk will be in terms of financial lapse, it will be a system lapse, or it may be a process lapse. Now, wherever a financial lapse is there, even if there is no system lapse or a process lapse, I told you example of the freight, then it is a high risk category. So we can give a color code of red. A system lapse is there. At the same time, it is not resulting in any financial lapse. In that case, you can give it a medium. You can give it as a green color. Similarly, there may be procedural lapses which may not have a direct impact either on the system or on the financials. In that case, it is a low value. And then make a combination of these system labs and financial labs, system labs and procedural labs, financial labs and procedural labs. So you get an array of what you call lapses, which get converted into what are the risk factors that we can take it into account. So here I've given you just a sample case of how to do the risk analysis, risk identification in the first point using what you call it, using a independent software, and then analyzing this into analyzing again in the software to find out what are the risk identified and what is the type it is. Then taking the type into account and a combination of the types, we can segregate the risk into whether it's a high risk or a medium risk or a low risk. So if we can get into a situation, we can take all the transactions for a period into account and we can make a risk. So this is the software that has been developed. So now with this help, I can say that we will be able to find out what is the type of risk that is inherent and whether it is due to system lapses, maybe mainly due to the configuration issues. We can address those configurations and we can reset the problem. So the internal audit will become a continuous, what you call a online check instead of doing an year-end or a period check. This was the idea. Now let us look into it, whether, for instance, the rate as per PO is different from the rate that is given in the invoice. ERP has got a system where when the goods are received, it is analyzed and checked in the case of at a receiving point. Then all the calculations, etc., is done by the system and it puts it to the standard rate. Then when the invoices and everything is checked, you have got what is called another, which is done by a different set of people, and those persons have got a what you call authority to whether take the deviations or not. But typically, once a purchase order has been released, purchase order is a contract. That means the contract terms should be there. If there has to be any change in the terms of the contract, either the purchase order has to be amended or it has to be closed and a new purchase order has to be released. Without that, the transactions take place, and what happens? You get into a situation of a high risk category. Then the next one is generating POs on vendors who are blocked. So this I already explained. So this also creating into what you call a situation of we have blocked the vendors, either maybe because of the poor quality, either maybe because of the poor delivery schedule, or maybe because his his performance is low in other parameters as well. So he has been blocked. But because of the urgency of the situation, etc., the operation level, they may take a decision to put it on a vendor who has been blocked. The configuration ought to have been wherever there is a blocked vendor, the system should not allow for the generation of POs at all. If an exceptional PO has to be done, as per the delegation of powers, it has to be escalated to the level where an exceptional decision can be done. If this configuration is not taken into account, then we can also generate POs on blocked vendors. Then unauthorized credit period may be allowed for the customers. The general terms of contract may be the contract should be amount should be paid in advance before the sale of the goods. But the marketing personnel, in order to ensure that his sales is there or to just to show his own performance, may give you a deviation which may not be incorporated in the system at all. With the result, you may sell the goods and you receive the amount later, maybe in the same amount or less amount, and you may call for a discount and so many issues because the goods has already gone. So in that case, what happens is if you are not done a configuration properly, then it also gives the situation of a high risk area. Then inaccurate invoices, product rates, and taxes. The rates may be changing season wise, and the person who is concerned may not change the rates for the season or the non-season, or the tax rates, which is there now because of the GST with so many changes taking place. GST rates may not be updated. In that case, what happens? You get into a situation where there is a financial risk. Then other one is the duplication of the material description and also on the material part numbers. There are many cases where the same part number may be for different types of materials, or a material of same description may have different part numbers. This happens not mainly on the A class items, it will be happening mostly in the C class items. Stationery is one of the best examples for that. For instance, the ream of paper as well as a pencil or a rubber may have the same part number. We may take it into account, these are not high cost, after all it is C. But as we go, if you go by the principle that whatever the wherever there is a revenue loss, a potential revenue loss is also a case for a potential fraud. So we have to ensure, and when we have invested so much of money in ERP, we have to ensure that all the systems, procedures, and everything is in tune so that we get the best out of the ERP. That is one of the things. Next one is quantity received in excess of the tolerance limits. See, in many of the POs, what happens, the supplier, just to ensure that his sales is high, even if the PO says only up to 5% of the goods are acceptable, he may be even giving more than the 5%. And because of the relationship the purchase man has with the vendor, he may accept that the excess quantity also. The excess quantity leads to a higher inventory. That means a greater working capital investment. And all this have got an impact on the profitability of as well as on the product cost of the product. So these are some of the cases I given. There are a lot more. All this we were able to generate in the system using the exceptional parameters which we have incorporated into the system. So what I am trying to say is, when we have a new approach, an approach which is different from the existing system, and try to put it in the way we want, we will get astounding results which can be helpful in what you call making the achieving the objectives. The objectives of the internal control is, one is on the operations, other is on the reporting, and the reporting also we can be very confident. And the third one is on the compliance issues like taxes and everything can be also be done. Now, and inevitable. So for the tragedy is to proact rather than react to technology's impact. Many of the systems, accounting systems and costing systems, or many of the what you call support systems are not fully tuned with the technology impact that is taking place. So we should take into account the technology impact, and accordingly we have to change our internal control systems, thereby the risk assessments. Then now there's a lot of talk on the artificial intelligence as well as the cloud computing. The project I have developed, I am now in the process of putting it into the cloud. And also now the statistical, the risk assessment, whether it's a high or low or is being done, is very subjective. I want a situation where using the AI, wherever there is a financial, financial impact, I want that to be statistically programmed, and it should also say, yes, this is the financial risk you are facing. So you have to bring AI and cloud into, whether we want it or we don't want it, whether we like it or we don't like it, the technology impact is there, and AI and this cloud is going to play a very prominent role in our business activities, particularly in the support systems like in accounting, finance, cost modeling, and everything. Then the perception of the internal IC is for internal control system. The perception of the internal control system has to change from audit necessity to decision enabler to realize the business goals. As of now, many feel internal control is more an audit objective. Auditor should do it, whether it's statutory auditor or anything. It's more an internal, more an year-end activity than anything else. But internal control with the use of the technology, we can always make it as part of the, it can be embedded as part of the transaction process itself, so that the, what you call, the risk that is coming out by way of exceptions can be plugged at the same point. If we allow the risk to continue even for a period of, say, a few months, it may give a potential case for committing frauds. So which we should definitely do. And finally, what we should have, I mean, I want you also to do, I mean, ponder over this. Education and training of personnel requires a very urgent attention. The technology and the systems are changing so fast. We are still on the, I mean, our perceptions are still what we studied in the colleges, what we studied in the institutions, or what certifications we got in the professional exams. There should be a scheme in every company and in every institution for what you call a continuous update of the subject because of the technology impact. Now, I just talked about, very briefly, I told about all these things. So why I'm saying all this is, the new approach is less time consuming and more accurate in assessing the risk. Previously, even to take some sample transactions of some 20 or 30, we were taking months to complete. Now we are taking a 1 million transactions in the matter of, say, around 1 hour, including the reporting, or even less than that. Now, the new approach is independent of the ERP system. At the same time, it takes the data from the ERP system and can generate the results at any point of time. It need not be at any, I mean, it need not be an year-end activity. Now, I can consider on these two issues alone that internal control can be made as a decision enabler through analytical insights. This is the, I mean, this is one of my conclusions. I mean, people can differ from me on this issue. Now, the points of conclusion is, as I told you in the beginning, when I started this internal control and financial reporting, I was not a very, very confident person whether what I'm doing is right or not. Always some sort of a bug would used to be in my mind, whether have I done it correct, whether somebody else will find out. I mean, it was pricking me a lot even after signing the reports. So now, at least after applying this method, I can do it at any point of time, and the approach gives me an enormous confidence in saying that, okay, it is, I mean, what we have done, I have got a reasonable satisfaction, it is okay. And the second point is, I have dispensed with the sampling method, and I'm taking the bulk transactions into account. At the same time, I'm giving the results within a, what you call, a fraction of time, which is where I feel it's very, very, I mean, it's my feeling that it is a big advantage in this new system. And this is my conclusion for this. And while doing this, I also give my special thanks to Professor Dr. Parasuraman, the director of SDMIMD, post director, office bearers of BCIC, and Mudrajaras of SDMIMD, who helped me a lot in this, and my own colleague Payal, who was enthusiastic in what you call doing these slides, and above all to the to the CFO BS Ravi Kumar and Associates, with whom I am associated. So these are all the points I thought I will briefly share with you, and I'll try to answer whatever I will be able to answer your questions. Thank you.
Thank you, Mr. Shivkumar. It was very insightful, wherein conducting regular internal control and risk assessments in the ERP environment, organizations can proactively identify and address vulnerabilities, strengthen their security posture, and ensure the reliable operation of critical business processes. Now, this ongoing process is crucial for any dynamic business and technology landscape, is what I can foresee from what you have presented. Now we have Dr. Devarajan, who is the president of BCIC, who has joined. Dr. Devarajan, would you like to add something over here?
No, I thank you very much, Shivkumar, and thank you, Parasuraman, for organizing this. It was a very interesting seminar which you organized. There are a few points which we try to do from the practicality of it. That you would understand it a little better. So I was just thinking that the controls should start from the origin, from the beginning itself, rather than at the end of the event happening. So we normally put a lot of okay in our system of SAP, linking with the controls, risk which is there, and initially there may be some risk to be taken. As a company, we may have to take a lot of risk. So whether it is approved. So we feel that the process establishment from the beginning would definitely be a better way that we have tried out. Second, this is the first point. Second, which we identified as rotation. We also have a plan in which we rotate internal auditors to the process plant, understand the Gemba portion of it. Then what happens? It becomes internal auditor becomes an enabler, not an auditor himself. He knows what's happening. He knows the processes. So that's another way we are trying to bring in. And the third point, I think you made a very good observation, is bringing AI and ML into it. And that's the future in which I think it might require a detailed discussion, how we can go about it. But we have to strengthen our base and then take it to the next step. These are the following points. I think, thank you very much for your excellent observation. And very clearly you're putting the points, what are the things to be done. And we will take it up further in this. That's my point. Thank you very much, sir. Thank you, Parasuraman, for organizing this.
Can we have about 5 minutes for a question and answer if anybody has anything with
I had 3
Mr.
points.
Shivkumar?
I think I had 3 points. Can Shivkumar give his viewpoint on that, please?
Yeah. And regarding your first point, taking of the risk, I mean, no company can survive without taking risk. That is a point which is well accepted. But at what level the risk has to be taken? So this should be very clearly specified in the delegation of powers, which has been, I mean, which should flow from the board of directors. At which level, what sort of a decision, I mean, risk can be taken. If it is a strategic risk, it should be at the board level. If it is a tactical risk, maybe at the senior level. And if it is the operational risk, it should be at the operational level. So this sort of a clarification should come in the, what you call in the delegation of a worker in the shop floor has not come. So the supervisor wants to give what you call overtime to the guy who's in the existing shift. This is a risk. Definitely, it's an operational risk. It need not go up to the tactical level, and I mean, it not go to the CEO. I mean, the divisional head to say that yes, you please give this. It need not go. He can make he must be empowered to do it. But on the other hand, if you find that there is a what you call a heavy demand, and you want to do a subcontract the certain items so that the customers this one orders are fulfilled. Here it is a tactical risk. The tactical risk can be taken by the what you call the concerned heads. So it comes to the strategic risk. I mean, it should not be delegated in my personal view. It should be taken only at the board of directors, whether they want to shut down the business, whether they want to go for a new business. This should be taken. For instance, Thermax, which was mostly on the heat exchange system and in the boilers, they went for air coolers, and a business which is entirely opposite to what they were doing. That means they went for the cooling systems from boilers. I mean, they also had the boilers. So this is a strategic decision they had taken. This should be at the what you call at the top level. So all these things has to be clearly specified in the what you call in the delegation of powers, as well as in the vision and the mission statements, and also on the strategic corporate plan of the company. And that wherever possible, it should be incorporated into the ERP. Why I'm saying it should be incorporated into ERP, particularly the tactical and the operational decision, is there should not be any individual indispensability in the system. That means if the particular situation warrants some sort of a change, it has to be taken by the person concerned. So there should be an authority as well as a responsibility, and above all, there should be accountability for the decisions. And this can be formalized only through a delegation of powers which has incorporated in the ERP. ERP has got the system of basis where you can also say who is responsible for what. All this depends upon the configuration. The configuration, unfortunately, the scenario regarding the ERP configuration is the persons who are well versed in the process, that means the company persons who are well versed in the process, they are not aware of what is in the ERP. And ERP persons who are now trying to configure the process, they are not well aware of what are the intricacies involved in the process. And these processes vary from company to company and within the company, division to division. So this aspect should be considered and the processes should be optimized before we automate it. That's the point I was trying to make it in the beginning. And I hope that's the one way to solve these problems.
Shiva Kumar, thank you. But very quickly, there's one question on the chat box. If you can very quickly answer that in the next 2 minutes or something, because we are running out of time. Can AI really help?
Yeah, it says, sir, how long will the period of scan after selection of module in internal system? And what are the types of modules for the selection in the new approach of the methodology? Is the question from one Mr. Vikas Khanna. Sorry, Vineet Kanta.
Okay. No, the number of modules available in the ERP system is generally basically 4. That is the procurement to payment, and then the order to cash, and also the asset accounting, and also I got the HRD and others. HRD. These are all the basic system which is supported by finance, and the material management or the inventory systems, etc. So this has been this is done. But how far AI can be used? Even I'm not at it is too early a point of time for me to say how AI can be used, but definitely it can be used. The period of time, as far as my new approach is concerned, you can take any period of time, it will work, and any volume of the transactions, it can work. It has got no restrictions on that. But how to use AI, yes, it's a subject which I have to study myself. But definitely it has got a lot of potential and the automation will become easier.
Thank you.
Thank you. So, Dr. Parasuraman, would you like to?
Yeah, Rajasree, I think you can close because time has run out.
Can you please do the vote of thanks? Can I request you to?
Yeah.
Sir, 1 minute. Before I conclude, I would like to again thank all the BCCI Governing Council, the President Devarajan, as well as the Professor Parasuraman, Mudra, and my own associate Poyal, as well as my associate company where I am working, that is B.S. Ravi Kumar and Co. Thank you very much, and a wonderful opportunity you have given me to present it. Thank you again.
Okay, thank you indeed. Yeah. So, Dr. Devarajan, can we close it? Yeah. Okay. Thank you very much, all of you, for patiently attending to this and interacting with Mr. Shiva Kumar. I'm sure that these sort of topics are of great relevance both to industry as well as academics, and more will be learned in the days to come. Thank you very much.
Thank you very much, sir. Thank you very much.
Can we have this online on YouTube? Can we put this on YouTube? Are you okay with this, sir?
Yeah,
okay, no problem. But I've not mentioned any name of my companies or the clients, which I don't want that to be shown also.
Sure.
Thank you, sir. I think it will be useful for all of us. Thank you. Thank you.
Okay.
Thank you. Thank you, Purushot.
Okay.
Thank you. Thank you all.
And thank you all of you who made it for the session. Thank you.